Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 23rd of October and the UK is in a massive state of disarray. Liz Truss, not gone in 60 seconds, but close, 44 days she lasted in a premiership, becoming the shortest serving PM in history. And yes, the lettuce outlived her. Britain will have a new Prime Minister by next Friday. Just how much of a state of disarray are we in, Kev, do you think?
Words escape me, to be honest with you. It's, looking from afar, it's an absolute embarrassment. You know, the country's just in a mess. They can't seem to decide anything. And economically, it's disastrous. Never mind the budget. Now coming back on all of that and now saying we're going to have spending cuts. I think I said it on another Sunday Roast, was it last week or the week before? You know, I think the UK's got to wake up and realize now it's on its own and not in the European Union anymore. So it hasn't got that stability alongside it anymore. So if it makes a mess internally, it's going to be a big problem, and that's the situation we're in at the minute. So I just hope they can stabilize the ship, get a new leader in, whoever that may be. I mean, there's talk it could be Boris Johnson again, which is just bizarre.
I mean, if that happens, it would just be the biggest U-turn ever. I mean, he's plotting his comeback, apparently. He was on holiday in the Caribbean, and there's rumour that he's on a plane back, or he's already back in the UK. And this is the same Boris who stood in front of the same lectern in front of 10 Downing Street 3 months ago to announce his resignation. I mean, what's going on in the world? It is like it's a soap opera.
It's bizarre, and the instability that it's causing is tragic. Basically, you know, I mean, even the Conservatives themselves just piping down and letting Liz Truss get on with it for a few months probably would have been the wisest thing, but they just weren't willing to do it, were they? Because they just think it was a disaster, even if down the line they thought it could change. But anyway,
I think we need to move somewhere a bit warmer. Well, certainly I do. You're already right.
What I actually think we need, Phil, is we need a year of Jubilee. You know what a year of Jubilee means?
No, go on.
A year of Jubilee in the Bible was basically that everybody's debt was scrapped. So nobody had any debt anymore. This was where the word Jubilee comes from, the year of Jubilee. Do you know anybody who knows anything about Jubilee?
We could welcome Leon Coetzer, CEO of Jubilee Metals Group. Welcome, Leon.
There you go.
Oh, thank you. Thank you, Phil. Hi, Kevin.
Hi. Good to speak to you, Leon. We were talking before we started this about your glorious country and background and our English culture and your Afrikaans culture. So if you'd like to give us a few words in Afrikaans, please do.
Well, I suppose that to kick it off, I must welcome everybody in both languages. So welkom al die Jubilee manne daar buite. Ek hoop julle geniet hierdie sessie saam met my. So that I will say at least.
As you wish. I was going to say shukran in Arabic.
So, I mean, for listeners, before we take a deep dive into the company and its assets, Jubilee is described as operating world-class projects and ensuring a positive impact on the environment and its stakeholders by shareholders by reducing the historical footprint of surface waste, processing chrome, platinum group metals, copper, cobalt, and vanadium. I think it's probably obviously a fair assessment, but should we talk first, Leon, about Zambia, where you have, I believe, the Sable refinery, copper and cobalt tailings projects in Kabwe?
Yeah, sure, Phil. We moved into Zambia as a diversification from purely having PGMs and chrome in South Africa. We did that back in end of 2018 and finally moved in 2019, just before COVID hit. And we went in there into Zambia drawn by its vast waste portfolio it had. At the time, Zambia sees it sorted as a liability, but they have north of 3 billion tons of waste, not million, but billion tons of waste on surface. And if you look at Jubilee as a bunch of processing and chemical engineers and in our laboratories, we focus on unpacking that waste to try and figure out, can we create value out of that? And that drew us to Zambia. And you're right, we entered by first buying a dilapidated old refinery from Glencore. And we set out to recapitalize that refinery and repurposing it to focus on the recovery of metals from waste. The key next step was obvious, is to go find and secure that waste. And that's how we approached Zambia back in 2019.
So if I remember right, I was actually invested many, many years ago in a company called Barclay Mineral Resources. I believe they had the Carbway tailings. Do you want to just tell us how because I know that was probably one of the most polluted places on the planet at the time. Do you want to just talk us through progress there and how things are going at Carbway?
Oh, yeah, that's interesting coincidence. You're quite right. BMR, by Berkeley Mining Resources, owned the rights to a surface waste in Kabwe, old slag and tailings. And you're right, if you were to Google the town Kabwe, I think it's still regarded as one of the most polluted towns in the world because of historical mining. Back in the old days, people were mining zinc and lead not one of the most healthiest metals around, and the dust from that operations, and a lot of activities on the go at the moment, both from the World Bank and the United Nations, various other initiatives to try and see how do they try and correct the ills. We, in fact, entered that area by partnering with Barclay Mining Resources to see how could our engineers unpack that waste, to see how could we implement a solution to extract that, and in doing so, also rehabilitate that old historical tailings dam. We went actually far down the line in completing the test work, designing the solution, piloting the solution, and even started constructing the solution to extract the lead and the zinc. But in doing that, and as we executed that strategy, our copper strategy just overtook the zinc and the lead and dwarfed its impact on our group. And it's something we still have in the background, we still could go back to, but at the moment the focus on copper has completely overtaken that. But just the sheer magnitude of the opportunity has overtaken it. We've done an enormous amount of work in stabilizing and protecting the environment of that particular waste. We work closely with a number of institutions to try and correct some of that historical issues. So the town looks very different already. And when we entered, there was really no big industry in Kabwe. Today, our Sable refinery, which is also the biggest employer in the town, is fully operational. It runs, it employs north of 450, 500 people, with many contractors and communities in the area. So there's a dramatic impact that's happened since 2019.
So presumably, as you mentioned, in Zambia, the copper production, I think that the latest update was there was an increase of 14%, something like 1,388 tons. How's progress so far? I mean, are you happy with the way things are progressing and also the refining strategy there?
Yeah, so we took Zambia and we actually broke Zambia into two regions, not really because of geographical, but because of the infrastructure in Zambia. Everything moves in and out and through a town called Ndola, and you really want to keep everything north of Ndola to the north and everything on the south to the south. So we broke the country into two regions, and that's why we launched what we call the southern and northern copper refining strategy. The south being Kabwe and that region, and we set out to implement it first. It's more of a taster of whether we can actually show the market that we've gone from PGM and chrome, and we can successfully implement a copper waste all the way to metal project. So in the south, yes, we built a new copper concentrator, just commissioned that in June, July this year. We revamped, repurposed, and renewed and expanded the Sable refinery, then integrated the two, the concentrator that feeds and makes the concentrate for the refinery. And all of that was launched now in June, July this year. It now has a capacity of like 14,000 tons of copper per annum. And that's shown our investors, shown ourselves, and more very importantly, shown the Zambian industry and its government that we can do this. We can take waste and turn it into cathode profitably. And we're on the back of that now, we now start with the northern refining strategy, which is much greater scale to pursue. And we had to execute this very carefully, because as a company that really has not stopped building over the last 5 years, we had to also reach a point where once we've launched this copper facility and the copper refinery, that we also ended up being debt free. Because the obvious question was, if we're going to build something at such scale now in the north, is how the hell we're going to fund that? And we had to get to this point on positive cash flow and a balance sheet that's not leveraged. So we can now finally use our balance sheet to pursue the far bigger target, which is the northern refining side.
And when you say far bigger target, Leon, how much in magnitude are we talking about in terms of what you are doing at the present time?
Sure. We told the market 2-3 years ago, we gave a very modest target. We said we're going to reach 25,000 tons of copper within by end of 2024. But on the success that we've now implemented in the South, the way that we have shown that we can do it, we've been able to test our ability to operate in this new jurisdiction, understand the mechanisms that make a project successful, the water, the power, the road, all that infrastructure. In the meantime, we've been able to secure an extremely large portfolio of waste. And we're in very advanced discussions to more than double that portfolio to 600 million tons of waste under our management. So we are at a point now where we can dream bigger. Where we set 25,000 tons as our modest target, we believe we can dream much bigger. On having 600 million tons potentially under us, we could dream of 40,000 tons of copper per annum. And that's where we are currently aiming for.
So that's Zambia. Now, the main production and the main thing that Jubilee was always known for is the things that are happening in South Africa. So give us an overview of the platinum side of things in South Africa, and how, I suppose, I'm giving you like 10 questions here, but how do you see the platinum metal space moving in terms of its value and all of those different things going forward? Sorry for a million questions.
No, perfectly fine. Let me start with what we are doing, and then we can get to the market itself. So in South Africa, we really started life in 2017 when we built our first PGM or platinum group metals facility. We did that with Mitsubishi, and we commenced that operation on a historical waste material. What we've done and what we do as Jubilee is we look at waste created by industry, as we said, and then we're trying to see, can we extract value? In this particular waste, it had both chrome and PGMs in it. So you have to extract the chrome first, and then what remains is the platinum group metals that you then recover. And that's how we implemented it. Since then, and especially over the last year, we've grown exponentially. We started life in 2017 producing 6,000 tons of chrome concentrate per month, roughly 70,000 tons per annum. Today, we do 1.2 million tons of chrome concentrate per annum. It makes us one of the largest producers. That chrome we extract then produces this remaining PGMs. And this year, or the last financial year, we finished the construction of our new Inyoni, as we call it, facility. And Inyoni, coincidentally, is an African word that means bird. You can make the connection yourself. And that facility today has been expanded to be a facility that in its own right can make 44,000 ounces of PGMs per annum. And that's what South Africa is. It's a very large chrome operating unit with multiple clients, being able to process multiple feed streams, and it produces then both the chrome product and this PGM-rich discard, which goes into our PGM process where we produce our PGM concentrate. As you said, it's the foundation of our group. It's where we started. It's the biggest driver of cash flow. Clearly, copper now, as we expand, not only starts becoming significant, it's set to overtake the PGM and chrome side of our business.
How much of the credit, if you like, as a percentage terms, comes from the chrome, and how much comes from the PGM side?
Yeah, so our chrome is basically a byproduct, and we use that byproduct to offset some of the costs to make a PGM ounce. Because how we contract on chrome with most of our clients is we've built very large, very efficient chrome facilities, and we allow our clients to make use of that capacity, of course, at a fee. And what we then mainly focus on is the PGMs that come out. So when you look at our earnings profile, it's dominated by PGMs. Our chrome contributes to that PGM, and that's why our PGM unit cost to make 1 ounce of PGMs is so low. As we told the investors, is that we target roughly around about $500 to $450 per unit of PGM ounce we produce, which we sell for north of $1,300 to $1,400 an ounce. So it's a strong margin business, but it's that strong margin because you have this chrome credits, as you say, coming off as a byproduct to counter the cost to produce a PGM ounce. And that's what makes that business so healthy.
And the PGM ounces you were targeting were 44,000 ounces, I think it was. So do you anticipate that will climb?
Yes. So what we have the option now is 44 is our own capacity now that we have. We are now able to grow organically from there. We all of our operations in South Africa is limited to only one of the PGM regions. We're yet to expand into the second PGM region in South Africa. And that's where the expansion offer is for our potential, is for us now, is to replicate what we've done here in what we call the Western Limb, which is the largest region in South Africa for PGMs, to replicate that into the Eastern Limb. We've already secured clients, and that's something we actively looking to do. We have two options, either to build new or do what we're quite renowned for, is buy old and repurpose it for our operations.
Yeah, and as I said before the interview, I did a bit of research just on the figures that you were putting out, and it seems that yes, you've tried to, or not tried, you have managed to redevelop things while still producing, but that's obviously hit production as well.
Yes.
To a smaller degree. But
Yes.
looking at full year 23. You're probably going to be kicking out free cash flow of close to $100 million, I think, from what I mean, this was, very simple calculations, but I don't know whether that's correct or not, or alternatively, how do you see it progressing yourself, in terms of the finances going forward in 23, 24?
No, sure, Kevin. I mean, you put your finger spot on. If you look at the past year, we undertook quite a tall order to build both expand chrome operations, nearly double the chrome operations, expand our PGM operations by 45%, and operate the facility, and at the same time build a copper concentrator and integrate it with a refinery. You have massive mining companies who wouldn't undertake such complex projects that we've undertook in the year. And you're right. So we had budgeted to have lower PGM production, while we then step up once commissioned. We still made our target, as we told the market we would. The key driver now, as you say, the platform we've set for this financial period is a facility massively expanded, able to benefit from our own operations, where in the past we might produce 45 or 50,000 ounces, but a big portion of that was actually done in joint venture with another company. Now we are making all those ounces through our own facility, where earnings are allocated to Jubilee. And this is also the first financial period where the copper can now start coming through at significant values. Yes, we made copper previously, but it was more of part of our development and test, where we were testing feed systems, testing feed types through our refinery to make sure it was ready for this integration. It's the first year we can now start producing significant quantities of copper. And yes, one can expect that to come through in our earnings, like you say, quite significantly.
And you said that you were aiming for 25,000 tons. So is that probable in 23, or is it going to take another year to build that up?
Yeah, so 25,000 we said for end of 2024. The capacity we've now launched in the south is 14,000 tons of copper. That's now integrated and operational, and that's the southern capacity. We are now at the point where we can build double or treble that capacity in the north.
Okay, by just adding more equipment, you have the feedstock for this?
Yes, and that was the key. We went out and first secured the feedstock. So the feedstock is done and dusted. We've got 300 million tons under our management. We're in various discussions targeting to double that. That's all material at surface, locked in historical wastes. So the capacity of the north is not limited by our resource. It really is driven by what size of refining footprint do we implement in the north.
And what sort of percentage copper do you have in that 300 million or 600 million as you hope to have?
Sure, it varies widely from the source of the waste that produced it. So these wastes run from 0.25% copper at the bottom end up to 1.5% copper at the top end across these various resources. Our whole technique is Jubilee. What makes us so renowned in our industry is our ability to take that waste which might have, as we said, 0.3% copper. But that copper, that 0.3% is various types of copper. It's not one type of copper. It's got copper oxides or copper sulfides or, a refractory copper, not to be too technical. But our biggest job then is to unscramble that waste into the types of copper that is contained in that waste, because each type of copper needs its dedicated process. And that's where the clever bit from Jubilee and our research facilities come, is how we unpack and unscramble. It's like taking a dustbin and separating out the paper, the glass, and the metal, and then processing those separately. That's exactly how we take these tailings dams and wastes and unpack them and unscramble them, and then present them to a dedicated, bespoke process. That's the key to make these projects successful.
So how many years of feedstock is 600 million tons if you were to produce 25,000 tons of contained copper a year?
It's way beyond 25, 30 years of material.
Okay, and you anticipate that there is enough material to keep adding to that, so you have a sustainable amount?
I mean, we aren't even scratching the surface. There's 3 billion tons in Zambia alone. That doesn't account for what's being added monthly by operating companies. So the potential for growth is tremendous in this space. And that's just Zambia. We haven't even spoken of the other countries, that mining jurisdictions. And that's the beauty of the approach. It's how replicatable it is. We've taken it from chrome to PGMs, from South Africa to Zambia. Once successful in Zambia and being at scale at Zambia, nothing prevents us from taking that at scale to another jurisdiction.
And how do you see the copper price? I mean, we have continual conversations with Colin Burge, your ex-chairman. So, I mean, he's Mr. Copper buff in terms of thinking that copper prices are going to not necessarily go through the roof, but be consistently higher. But we've seen in 2022 that the copper price really has dipped significantly.
Yeah, no, copper dipped. Most metals pulled back sharply in 2022. The world seems to roll from chaos to chaos, and from challenge to challenge. The one interesting factor that's unique, I suppose, to copper is if you look at just the supply constraint. And it's tough to estimate or nowadays project what the world is going to do next. But if you break it down to the fundamentals, copper's ability or constraint in the supply is clear, it's factual. If you look at the copper stocks in the world, an article has just been released from one of the world's biggest copper traders. At the moment, copper stocks in the world are at record lows, and yet the copper demand isn't at record lows. So the fundamentals of copper is so solid that one can only expect the copper price to appreciate. Yes, copper pulled back alongside the chaos in the world, inflationary pressures, the expectation that there's a short-term pullback in demand. But the supply constraint is far more significant and serious than the dip in demand. And that's why the copper fundamentals are so strong. It's why copper, even though it's pulled back and it's in the $7,500 a ton, it's still significantly up from previous years as a copper price, driven by those fundamentals. And if you look at the use of copper, it's not isolated to a specific technological route the world might take. Copper is needed for communication, for connectivity, for urbanization, for electric vehicles. It is a metal that without which the world simply cannot grow. I mean, that's the fundamental link, I think, that copper plays in a different space than many of these other special metals.
Yeah, we all need houses and we all need refrigerators and all those type of things, which take a considerable amount of copper. So tell us what your view is then on the platinum scenario. Then what do we think is going to happen going forward in the platinum market? Do you see that the price will rise over the coming time?
Again, I want us to look at supply-demand fundamentals and what do you think the world's going to do? Platinum is another metal where on the supply side, there's been limited, if any, growth coming through. To develop a PGM mine or platinum group metals mine is 7 years in the making. They are typically deep resources. And there's nothing on the horizon of significantly lifting the supply of PGMs. That's the one positive. The second positive that's coming through more and more on the PGM is its usage side. Platinum and palladium was used as catalysts for the combustion engine, and everybody's got their view on what percentage of future automobiles the combustion engine might still play. But what's coming through very strongly on the technological side is the hydrogen fuel cell as the ultimate source of power. You would have seen the announcements in Europe from trains in America, as well, trains and buses moving towards it as a supplier of energy for vehicles because of its massively long range it offers. So there's a very exciting future that is in the making for PGMs and its continued growth on the demand side. On the supply side, it'll always be constrained. It is tough, it's centralized within South Africa. The world supply by far, most of PGMs, but with a huge margin, comes really from South Africa. Palladium, depending on what's happening between Europe, Russia, and Ukraine, the other palladium source, of course, is Russia. It is likely to be constrained going forward in the supply. So one can expect palladium to reflect that in the short term as well, with that supply constraint coming through in the market. So for platinum, palladium, PGMs, I think it bodes well, especially looking at 2023 for that metal.
So looking at Jubilee overall, as I said to you before, I mean, it looks like you're possibly going to be throwing off £100 million of free cash flow. So as shareholders, what's the situation in terms of possibly paying higher or dividends as time goes by? Is this something you consider to plan to do, or is it going to be a case of we're making all this money, we can duplicate this every year to somewhere else for something else? So give us an idea of what yourself and the board are thinking in that respect.
Yeah, excellent, Kevin. Definitely, this debate is being held more and more by the board. Our immediate focus, though, towards 2024 is to complete our capitalization of this Northern Refinery or Northern Refining copper cobalt strategy. It's a big capital investment we look to make into that growth. It offers enormous earnings and revenue growth potential for our group. So we don't see ourselves being in a dividend paying position until the completion of that project. But once the project is completed, our net cash positions become to a point where, yes, it is something that will definitely be looked at as a company to start initiating a dividend for our shareholders who has carried us to deliver this company and all the capitalization that has happened over the last 5-6 years. So we're definitely approaching that point rapidly on the back of our copper strategy.
Yeah, and once you've completed those and you're throwing off $100 million or more free cash flow, you've got to be looking at price earnings ratios of at least 10 in this marketplace. So, you're going to be $1 billion company and hopefully paying dividends at that point. And compared to your current market cap, that's obviously significantly less. So this really seems to me a real growth story. And because of the way the market has reacted, not just to yourselves, but to everybody in the last while, it's gone a bit unnoticed, I think, that effectively you've in the quiet built something that really is going to be quite huge and going to produce for decades to come. I don't think there's any chance this is going to stop producing. Your only risk really is the future price of these metals.
Yeah, absolutely, Kevin. I mean, we've sometimes been our own worst enemy as a company and a group of engineers focused at building, as we have been building. And the last year was a very large build program we've undertaken. Is that in that building program, you go quiet on the market because you focus on the building and the construction. And the past 4 months market was probably the worst market to be quiet while you are building. So we look forward to, exactly as you said, first of all, show the market just the sheer size of what we've implemented, the operational numbers that it delivers. And as you said, the earnings that follow with that. We are also fortunate because we're a surface processor, not a miner as such, is that our unit costs are well within the bottom quartile of the industries we operate in. So it does buffer you from the metal prices in a sense of your viability. Clearly, our revenue is impacted by metal prices up and down. And it's also the reason why we chose the metals we're in. And also don't forget that we are about to add yet another metal into our revenue portfolio with cobalt coming in. As much as we have chrome as a byproduct in South Africa of our platinum group metals, in Zambia, we'll have cobalt as our byproduct out of our copper refinery. And that, as we told the market, built the refining line at our southern refining plant at Sable. And that is getting into production as we speak on the back of that copper project running.
Yeah, and that's only $75,000 a ton. So you wouldn't want that anyway, no?
Yeah, no, absolutely. And there's a couple of reasons beyond its value. It's for the lack of a better word, it's green cobalt. It's cobalt that comes from waste out of Zambia. So it is not untainted. It's not tainted cobalt.
Yeah, and you're cleaning the place up. Obviously, you don't want it lying about at the end of the day. It should be
absolutely.
From an ESG point of view. This company's a dream. That you're cleaning the places up.
Metal and waste processing, as my daddy always used to say, where there's muck, there's brass, and I think that's very true. There is a lot of that,
Yeah, absolutely.
Absolutely. And the world is starting to take it more seriously as well. There's a lot of companies who speak ESG. We do it. It's part of what we do. It's fundamental to our business.
Yeah. So, but you said it very clearly there as well that you haven't been updating the market. So we do look forward to you coming on again and telling us how things are progressing, because I think people will be happy to hear what you're saying and having more in-depth discussions about how you move forward in Jubilee.
Oh, no, absolutely, certainly, Kevin. No, it's definitely.
Yeah, so obviously, I think next Tuesday or this coming Tuesday, there's the announcement was made that you're going to announce the results for the year ended 30th of June 2022. So I guess that'll give the market a good update as to progress to date.
Yeah, absolutely. And as we said, we'll be hosting presentations. We want to make sure that we offer all our shareholders, not just institutional shareholders, the opportunity to engage with us so we can explain the numbers, put focus on what we've built, the size of what we've built, and what that means going forward. And we're definitely going to make the effort on the back of those results to make sure we create those opportunities for our shareholders to engage with us and with me personally.
Leon, we didn't ask you the question. So what? Even though we've all said yes, this is the Sunday roast that you're appearing on. So what would be your Sunday roast?
What would be my Sunday roast will be boerewors and steak.
Okay. On the braai?
Yes, very much so.
Okay, very good. So for anyone who would like that translated, what does that actually mean, Leon?
It means that we will be putting meat on a barbecue and
and cracking a couple of cold tinnies, no doubt.
And a big broodwurst is that big circular sausage. Is that right?
Yeah, that's exactly it. Yes.
The sausage that they put around in a big circle and then everybody tucks in. Very good. Sounds good. Sounds good. I hope you enjoy it.
Thank you.
Leon Coetzer, thanks very much for your time.
Thanks, Kevin. Thanks, Phil.
Well, that was enlightening, wasn't it? It was very interesting. Leon speaks with certainly a lot of confidence. It's always nice. And this is not a slight to any other CEOs or any chairman. He's very articulate, let's say.
Yeah, it was a good position. And I suppose they took a bit of a risk a couple of years ago by saying that they were going to invest heavily in the projects they have in South Africa and in Zambia. And I think it's about to pay off, to be honest with you. So, yeah, I think the future is bright with Jubilee Metals by the looks of it. And if there's any sort of uptick in the price of these metals as well, it's going to be exponential in terms of
he's in the right returns. In the right space, isn't he? With the platinum, palladium, and the cobalt is massive as well, as you say at the moment. I think certainly a lot of shareholders are very excited about the cobalt element of things, and as you say, copper is the metal that they've decided to really focus on because they understand just how much in demand it is for the whole infrastructure, EV, not just EV, but just in general in life. Wiring systems, as you mentioned, to pretty much everything in your house needs copper as an element to be in existence. So Yeah, very good. So, I mean, moving on swiftly, the week that was, there's been some pretty interesting movers this week in terms of, it feels to me, I don't know what your perception is, but it feels to me that there's been a little bit more liquidity in the market. There's been some stocks that have been doing 100%. We talked about Duke Mount last week that have done the 100%, the 200%, the 300%. And we're starting to see some stocks that out of the blue are doing 150, 200% in a day, which is nothing short of remarkable. You imagine putting your money into a bank account and getting 100% in a day, or even in a couple of hours, you would, that's why they call it, I guess, the AIM casino. But ultimately, it's very encouraging signs. So the first one that really springs out was Barron Oil, and I looked at this just at the end of the close on Friday, and I think it's just sneakily done like 200% or 250% in the last sort of 4 or 5 trading sessions. And it's one we've talked about in the past, probably over a year ago. And they've had an amazing week. The company called Sundergas Timor-Leste, which is in Indonesia, because obviously their assets are at Chudich, which is a Chudich production sharing contract, which is in Timor-Leste, as I say, in Indonesia. They're going to decide now whether they'll pursue drilling at the gas asset before the new 18th of June 2023 expiry date. And obviously evaluation of the prospect is ongoing. The company says there has been a step change in their understanding of the geological structures. And obviously Shell, the major, had previously explored the prospect, and there are hopes of significant gas accumulation. So it's kind of like been taken more seriously. And again, it's one we've talked about in the past. There's a theme running through the energy thing. I don't know if you've ever been invested in Barron Oil. I certainly have in the past, but it looks like things are fortunes are changing there.
Yeah, it's speculation in different shares has started to uptick, obviously. Some speculation, actually, and some just totally beaten down value. So actually, they've been springing back, I mean, the week that was that Trust didn't outlast the lettuce, and Steven Gerrard got booted because he lost another game for Aston Villa. So lots changing in the world. But what I'm seeing is when the story is right and people can see the money coming in, then the market is rewarding that. So maybe this is almost the first time that we've seen this in quite a while, Can't say it's the first time we've seen it in years, because it's not. But I mean, maybe because at the start of this year we had some excellent results and excellent returns, and then we've almost like had a winter for 6, 7, 8 months, and things starting to peak up a little bit. There's been a few interesting ones this week. We've got Mast Energy.
I was just going to say, just interrupting, but could you give us an example of one that has done exactly what you just said, where it's been beaten down, news has come out that they've got revenues, and there is a tangible asset there. That's onto what you just said. I mean, Mast would be a great example.
Yeah, we visited this, didn't we, in May of last year? No, May of this year, sorry, what I'm talking about. Piebridge, and the figures for the 6 months came out to August for Piebridge, saying that 32% profit margin, £865,000 of turnover in the 6 months. But more importantly, August was when it was up to full steam. And in August, it did, I think, £300,000 of revenue. And this is obviously replacing renewables when the systems aren't available. And the highest time for the productivity of these sites is in the winter. So it's going to come. And we saw it. I think the RNS was on Wednesday. Didn't do anything on Wednesday. Started to wake up on Thursday. And on Friday, wouldn't quite say exploded, but it went up
Friday,
to 5p.
it moved about 32% max, and it finished around sort of 18 to 20% up. So it had a good session. It moved into the 5s, which is always a kind of a bit of a psychological barrier. I don't know whether your share has a psychological barrier, but it seemed like that. there was a sort of a previous trend, and you're absolutely right. The thing that struck me about those results, and we had Peter Krugel on the midweek takeaway, and we'll link it in the description of this, because I think it is compelling listening, was, as you say, so for the 6-month period, March to August 2022, the generation sales revenue for the period was circa 854,000, okay, and with a total electricity generation output of 2,280 megawatt hours. Okay, so just remember those 854,280 megawatt hours. Now, for just August alone, the revenue sales were 314,000, and the electricity generation output for that month was 1,420 megawatt hours. So it was above half for the month of August for the total of the 6-month period, March to August, if that makes sense. So massive. And the other thing which struck me about that was basically when they came to when they IPO'd, which was about a year ago, just over a year ago, the figures that they quoted, which were the price that of the time of Med's IPO, the 6-month period, March to August, was 370, which was around 5 times higher than the price at the time of the IPO. And then for the August one, it was running at £619, which is almost 10x compared to the price of the IPO. I mean, get your head around that. I mean, I know obviously price of, electricity's gone up, price of gas to actually power the peakers has gone up, which we talked about with Peter. But what do you think about that from a business perspective? Do you think, and also they're talking about obviously winter, that it could be even higher, couldn't it? The outputs and also the revenues.
Yeah, it's going to be higher for sure because of the need for this electric input to come into the system. I think
let's bring out the Kev calculator a minute here, because
what you've got to look at. I'm about to do it now. What you've got to look at is one, this IPO to 12p or 12.5p.
Yeah.
So anything below that now, maybe you'd have to say is still cheap, considering now that they have effectively 30 megawatts.
Okay, so if I'm going to be a contrarian, I'll say, did the IPO at too high a value?
Well, yeah, everything was about energy and also about the fact that it was floated out of Kibu, and there's a good chance, yes, it did at that time. You were paying for the potential at that time.
Yeah.
Now, I don't think you're paying for the potential.
Well, now, absolutely. You're seeing some actual figures coming out, and that's exactly what brings you back to the original point you mentioned, is stocks that have been beaten down that have actually got a tangible revenue, EBITDA, however you want to refer to it. They're profitable, and that's what we're seeing as it enhances towards the site's profitability. The only other thing is, so in the RNS, if you read it, it says that it is expected that PieBridge will generate total revenues for 2022 in the range of 1.8 million to 2.1 million, with a gross profit margin of around 30%. And then the foregoing expected revenue is around 2x or 200% higher than the initially modeled at the time of the acquisition. So I guess the question to you is, model that with some pretty conservative P ratios. And,
if you look at it and say that in 2023, PieBridge is going to do possibly 4 million, okay, which is just less than double of what the figure they've quoted there. And that's basically because the first 6 months they were playing with it to try and get it up to speed. And we're going to go through a winter. So let's say from now,
I think as you quite eloquently termed it, fiddling about, which I thought was really impressive terminology. Even for you, that was cracking.
Yeah, absolutely.
I think basically you're right. They got it into what they call steady state.
So, and steady state, and then it has to go through the process of being tuned to get the electricity out to the what do you call it, to the providers, and so yeah, let's use 3.5-4 million pounds. Peter used 32% as a profit margin, and he said there's a good chance that could move up to 35%. But if you use £4 million, 32%, you're talking about 1.26, I think it is, 1.26 million pounds of profit from PieBridge alone.
Yeah.
Now, this is a utility.
Yeah.
This is not a high risk mining operation. This is a utility. So that would, you've got to be looking at 10 plus as a price to earnings at least. Yeah. So let's just use 10 for the sake of argument. If we use 10, then you're talking about a market capitalization of about £12.5 million. Yeah. Today is what we should be talking about, because it's forward looking. The market cap today is around 11 million. Okay. But the reality is that's only Piebridge.
Yeah.
This time next year, there'll probably be 30 megawatts, not 9 point something megawatts online. So it'll be 3 times that figure. And you would imagine 3 times the profit figure as well, or thereabouts. Maybe you can say it's slightly less, slightly more, who knows. And then on top of that, he said that they've got 100 megawatts in the pipeline of things that they're working on. Now, as they buy these, there isn't going to be that much dilution, if any, because basically they've got deals with Close Brothers. The sites themselves, they're not buying for huge amounts of money. And now they've started producing this income. If Piebridge produces £2 million this year, then the vast majority, or not the vast majority, but they're going to have 600,000, 700,000, 800,000 pounds of free cash to go and buy another couple of sites, work on the sites that they've got, etc., etc. So, yeah, I think it's got a long, long way to go. I mean, my first target price is the IPO price, and I don't think that's a million miles away.
Alchemy Capital Investments, that's been a good mover, hasn't it, in the last last week since since I first brought it up. We both talked about lithium. We talked about the Tees Valley lithium project, and yeah, it's had a good move. I think it was around the 100 pence mark, and it moved up to 150 on Thursday, and it finished the week around the 132, 135 mark. And there were some interesting tweets that came out that there was that Elon Musk and Tesla are trying or looking at the potential to open one of their gigafactories on Teesside, which would be quite an interesting, let's say, fit. And it just seems to be a bit more of a kind of a buzz around that stock. I mean, we've actually been approached by the company to talk to Paul, the non-executive chairman. So watch this space on that one, and as we try and delve deeper into the whole kind of Tees Valley lithium project.
Yeah, and the other one, which actually didn't move, but in my view should have, was Galileo. You get basically the agreement that £5.2 million is going to drop in your bank account in the next short period of time, because they've taken the option agreement, and really the share price didn't react. No. So 8 point something million pounds of cash for 16 to 18 million pound market cap doesn't make a lot of sense with the assets they've got. Again, good podcast on that. Have a good listen to what's been said in terms of the assets. You've got copper, you've got gold, you've got cobalt, I think, as well, involved in that whole situation. So, yeah, I mean, surprising, really. It didn't move up more, but maybe people will start to catch on and realize what is going on,
Yeah, so the other one this week was Greatland Gold. They announced that they'd been awarded a drilling grant for Ernest Charles Exploration Project, and they received a grant of up to 220,000 Australian dollars, which is circa 120,000 pounds, under the Western Australian Government's Exploration Incentive Scheme. And it's obviously going to be used to co-fund exploration at the Greatland's 100% owned Ernest Charles project. So we actually had a really good chat with Sean Day this week on the midweek takeaway, which I'm sure a lot of the Greatland Gold aficionados and shareholders will have heard. But in case you didn't, here's an extract from when we caught up with Sean.
In a nutshell, Havieron continues to progress. I think there's an exploration update out next week, which will give a good update on the drilling and the progress at the decline. So I think that will be another positive step forward. And of course the funding package, which is coming up to about 4 weeks ago now, in terms of the debt, the equity, and the strategic equity with Wailu coming in, I think together with some additional directors, I think was incredibly positively received, and it should be. it sets us up for success. But I like the format of today to emphasise what else is in the portfolio and why Havron is hopefully the start of many. And with that, what we might do is try to walk through the program or the asset base in maybe 6 or 7 steps. I think it's important to talk about what else is in the Paterson, and then walk through Ernst Giles, Panorama, Bromus, and the Tasmania assets being Fire Tower and Warrantina.
Okay, great. Fire away.
So I think if let's start with the Paterson. And again, I think there's no better place to look for gold and copper than where it's already been found. This is elephant country. You've got Telfer, you've got Rio Tinto's Winu up in the north, and of course Havron nearby Telfer to its east. But I think one of the things I most like is where our Scallywag tenements sit, a long structure which is sitting up to the northwest from Havron. That also leads on to our Jury JV, which we hold with Newcrest. And then further to the north, you see the Paterson Range East. What's probably useful if people are listening to this, if you get up our most recent corporate slide deck, there is a exploration Paterson slide, which gives you a bit of a map of our holdings in the Paterson. And then the following slide is the exploration portfolio, which goes through the other assets, which I'll talk to next. But I think that gives you, a pretty good foundation as to why it's got good proximity to other discoveries. It's a long structure, and we've got a program right now drilling through that Jury and Scallywag area. I think I've described to shareholders before, we did that a little bit differently this year. We started with an RC rig that basically went through that unconsolidated cover cheaper and quicker, opened up those areas, and then we're coming back in with the diamond drill and we're rig, and we're going to kind of drill through those exploration targets and take core out, and it's the core that we cut and then get assayed into that country rock. So that's going on now. And assay times are actually getting a little bit better. I think, at the beginning of this year, people were talking about 10 weeks. I think that's better than halved. So that should see information starting to flow a little bit quicker out of that exploration campaign. Just while we're still in the Paterson, I think Pascal's a really interesting tenement that sits almost kind of between Havron and Telfer. There's a good anomaly there that we want to kind of get on and drill. So that's interesting. And of course, even closer to infrastructure than Havron. So that's lovely. Rudel down to the south. Again, we've kind of worked closest to infrastructure. So Rudel kind of comes in secondary in our program, but again, has some really nice targets on it. And then if we go a little bit further to the south, we get into those Canning. Some of those we bought last year in 2021 together with Pascal. And again, they have some good anomalies, some good convergence of gravity and geo and magnetics. So the geophysics there help us understand why we find them prospective and why we want to drill them, because that's effectively what originally created Havron as this target, which was this confluence of a grav and magnetic anomalies.
So all of those that you just mentioned are gold orientated, or gold and copper?
Gold and copper. And if you kind of look at the history of the Paterson, if you go a little bit further across to the west than Telfer, you have the nifty copper mine. Now that had gold credits, and in fact it used to be an asset at Straits Resources where I was. So that's more copper. Winu up to the north is more copper. Telfer has been predominantly gold with copper credits though, and Havron also looks to be predominantly gold with some copper and potentially other base metal credits. So I think the way we think about this is you've got prospectivity for both. History tells you that gold is part of it.
And also the other one I think I will mention is Teck Minerals. Teck Minerals had some great news, really, that they're going to have 100% of recyclers. Again, we interviewed Robin Brundle there, and that went out yesterday on the Saturday brunch. So I'd suggest you have a good listen to that. But I mean, basically, recyclist shareholders have paid 4.3 pence for every Tech Mineral share. Tech Mineral shares are going for 1.8 to 1.9p now to buy them. So how do you work that one out? Obviously,
once the market wakes up to this, I can't. There's some stocks and some companies that I won't say I lose sleep over them, but I just, yeah, probably is the right term, because I'm overthinking them in my mind. Like, what am I missing something? Am I over? Is it overvalued? Is it undervalued? What does the market see that I don't? How is the market missing this? What is the value? How can we? And we had a really good chat, as you say, to Robin, and he went through things. We expressed some of our concerns about the acquisition itself, but what it seems like to me is that this was done on a legacy valuation of Recyclers, which was obviously discussed in the podcast, which you came up with quite an eloquent description of the way it worked. And in reality, the fact that they were willing to take circa 932 million shares in Tech Mins, or will be, because at the moment it is a proposed acquisition, and maybe that's why it hasn't reacted, because it's not over until it's a done deal. So let's and that applies to I'll come back onto the Galileo thing in a minute. We'll go back and use that sort of logic. So the reality is that it's not a done deal, has to be voted through at an EGM, or it'd be an EGM, extraordinary general meeting, obviously, to pass the resolutions, which is to issue circa 38 million quid's worth of stock to Recyclers for the remaining 51% or 51.5%, however, circa that. So as I said to Robin on there, I said it is testament to the fact that they're willing to take shares in Technology Minerals as part of the deal. Wouldn't you? I mean, if you were selling the business, this is just me, would you not want? There's still an inherent risk, isn't there, of taking a stock in a listed company? You don't know what could happen. So that is a really positive sign for me. And also the other element of it is that it was at a significant higher share price to the current market price.
No, I think the scenario is that even Recyclers know that the real value in this company is getting 10 of these plants going, and the total revenue and profitability from these plants. I mean, it's going to be an absolute cash cow, this company. So a tumultuous week. Stock market might be picking up. I was on Friday, I was looking at the US markets. All the indices were up a couple of percent. The VIX, which is like the measurement of volatility in the market, has started to drop back down again. It's maybe 20% lower than it was 2 or 3 weeks ago. So, maybe we're in for the normal period of time where this is the time really that the markets tend to pick up and grow. And I don't want a Santa rally. I just want a reasonable rally. But let's see if we get it. The small caps deserve it, I think, to be honest. There's so much value out there, and especially in my view, in the mining sector. There's a lot of undervalued stocks. We could name multiple ones. I mean, Brez is another one, Blenco Resources, undervalued. NAV, massive. Valuation, very small. Sovereign Metals, another one. I mean, that's very cheap at the minute based on the massive MPV that system's got. And we're going to need this. We're going to need these stuff, both graphite and rutile clay, so titanium. We're going to need these things. We're just going to need them. Simple as that. So
Sure.
If you've got patience, I think,
and
you can wait it out. It's coming.
I guess that's a good question. Do you think this is patience now paying off the stalwarts, those who've really been into the AIM and the small caps and the nano caps for last 5, 10 years, 15 years, who maybe haven't been put off? I'm not saying been put off. Obviously, you every week or every month you're thinking, why do we do this? There's times in our lives when we do think, why do we put ourselves through this misery and this punishment and watch our portfolios drop and dive? And ultimately the buzz and actually
shares can go down as well as plummet.
Do you know what? and there was a really interesting article in the Independent on Friday, and it was talking, this is literally the effects of stocks and the kind of the casino effect, but it was talking about cryptocurrency. And the article led with crypto can be just as addictive as hard drugs. Okay. So what they're finding now is there are actually rehabilitation or rehab services that are experiencing a rise in people who are hooked on dealing in digital currencies. So they started off during the pandemic, they got in, they banged $1,000 into this, Ripple XRP or Ethereum, bang, they made $4,000. Then they took it out, they lost it. Then they went into something else, and then they saw another one rise, and they went, FOMO'd and go, oh man, I can't, I've got to get those gains. It's like chasing the next, like a heroin addict.
But it's gambling.
It is gambling. It is, and it's exactly that. So that you hear of these guys who then they borrow $5,000, they borrow a bank loan. The worst thing that everyone said to you is, you hear the stories. I borrowed $10,000 and I've put it into GKP, 10 to 15 years ago, and you just think,
what do you do that for? People
who are borrowing money and taking bank loans for stocks, that's a red flag, isn't it? It's like the taxi driver. You get into a taxi abroad, and someone says to you, hey man, you hear about that new digital currency, Bitcoin or Ethereum, right? And when your taxi driver is telling you to buy it, it's time to sell it, right? Because every man and his dog knows about it. And that, I guess that the point is that, do you think that the people who have been hanging around in the last, I'll say 5 years, because we have had good times during the start of the pandemic, there was money to be made. Do you think the people who are hanging on for the last 12 months are starting to reap the rewards now? And is it the right time?
I doubt they feel they're starting to reap the rewards yet, but I think there's definitely potential for huge upsides in many of these stocks. Maybe not even back to somebody's buy-in period if they bought it in the heights of 2020 or whenever it was that we had that massive uptick. It's hard to know, but I mean, what I would say, people, if they've found a stock that they like, they understand the story, they understand the financial scenario behind it, and they've been building it, they're going to get wealthy. That's my view. They're going to get wealthy. We will come on and discuss our portfolio, basically, which in general has been smashed to pieces because of what has happened in the market.
Yeah, I'm not around that week, unfortunately.
No, I'm hands up. We said we thought these stocks were going to do well.
An interesting one, isn't it?
And we will talk about what we think happened to these stocks, because we went with those stocks with the best of intentions that we thought it's going to do well, and they could still recover, and we could still have more winners. We've had 2 winners already, but you had to take your money out. There was no hanging about. Both Ben and CDL, Cloudbreak, both hit our targets, both did immensely well, but you had to get out. And I suppose that has been the key this year, hasn't it? If you make money, you've got to take it. It's not investing as such.
Change your mindset. There's no long term hasn't been rewarded in this current climate, because the global mindset has changed to being short-termism. Everything is short-termism. It's the now. It's the, and then maybe you could argue, and I'm not, I'd like to hear your thoughts on it and listeners' thoughts, that we're in a new type of investing. People don't want that, holding on for 500% over 5-10 years. They want the quick 20-30% and moving on, the sudden gains, the instant gratification, let's call it, of these stocks. So maybe things are changing, and but what I am seeing, I mean, since I've started analyzing every RNS in the morning, which I've done religiously now for 2 weeks, and putting out you may have seen them on the Telegram groups, the roast news service, basically a short summary of the RNSs in the morning that I think, or that we think, are potentially not game changers, but are significant news that may move the market, whether that be up or down. Some are negative, some are positive. Predominantly they are positive. So what I'm seeing is stocks that have got the real news. Everything is news driven, right? But not everything is news driven, because we're seeing some stocks some days that do 100% or 80%, and they've not had any news for 2 or 3 weeks. So you're thinking, is it a pump? Is it, we don't know what makes that, sentiment changes anyway. They're suddenly undervalued. People realize there's an influx of buying, yada, yada, yada. So the point I'm making is, it is definitely news flow that is driving stocks now. in this last 2 or 3 weeks, where a significant contract win comes in. We saw it today with, I think it was TWD that did 180%. Albert talked about that in the group, didn't he? Saw it come in at 2 o'clock in the afternoon. It was trading at 7p, and it went up to something like 16, 17. It did over 100%. And he traded. Yeah, it traded, you know, within 2 or 3 hours, it did 150 or 100, whatever, you know, 150, 160%. So there are those stocks, and that was down to a single news piece. You know, why else would it have moved? Yeah, there are the odd ones that move, but ultimately there was a great RNS, and it moved the stock on the news. So that's encouraging.
It is, but it's been beaten down from £1 9-10 months ago. So I mean, it lost 93% of its value.
Exactly. So there'll be a lot of holders, unfortunately, you know, the long-term holders that maybe took the IPO, the placing or whatever, as you say, at a much higher place, 180p or whatever, that are still going, well, I only need another 90% or another 450% to break even, or something ridiculous. Do you know what I mean? From these current levels, which is shocking. But as I say, if you've got the cash on those, I think the key is, if you've got the cash now on the sidelines to jump into some of these RNA in the mornings, either by pre-market or get them on the bell, you can make some pretty good returns on them. So, but as you say, so back to the stock. Yeah, we will definitely do before year end. We will look at the Rose 2022 picks, which are was the 12 stocks for the 12 days of Christmas. We will analyze in, let's say, not great detail, but we'll go through the kind of like not the pros and cons. We'll go through the story of how they've moved through the year. As Kev says, some of them, like Ben, have hit the targets. I think we had an initial buying price of around the 15 to 16p or something, and we had a target of like 70 or 80p on Ben, and it went through and smashed £1. And it's all very well these people, detractors, saying, well, it's only at 25, 30p now. Well, yes, it is, but it's been above our target. The whole point of a target is that is the upper target, the way we think the value is of the stock. Has it smashed through that? Absolutely, it has. So you can't just go, well, it's not there now, so you're encouraging selling. Well, we're not. All we're doing is we've picked some stocks that we think have got value in that area. We've defined why they've got the value. It's up to you whether you invest in them or pull the plug on them, or, you know, invest and sell them when that is. So yeah, I think there's been some really good ones, and I'm just looking at the list now, and bar probably 2 or 3 stocks on that list, and I'm not going to announce what they are now, but we'll do it with. They've all still got great potential. You know, they really have. There's, you know, Mast we've alluded to. Extract Resources has been beaten down, but it's still got Africa Pioneer really hasn't moved much. It did move up at one point. Ben's Creek has gone there and so Conroy Gold, you know, we'll have a good show on where we'll go through the whole valuation of the companies and where we see them, and maybe they'll make it into a list. If we do a list next year, we can include them in there as you know, continuations.
So yeah, the other one was that we caught up with this week was Callum Summerton from Chill Brands, that they launched the new website both in the US and in the UK, and yeah, it seems to have been taken pretty well. Biggest ever day of sales, I think it was, because they had a 50% discount on everything. So they had the biggest ever day of sales in Chill Brands the day it was launched. So that was a good result. And I think you're sort of trying to give away a few clues, I think, with some pixelated pictures of vapes and things, which hopefully are on the horizon to come. And I think that will be a bit of a game changer, actually, to be honest, because the potential for vapes and the expenditure people spend on those type of things is pretty high. So yeah, I think that could be a real, not game changer, probably the wrong word, but a building of revenue as they build this marketplace as well under chill.com. So yeah, I'm pretty excited about this one, actually, because I think it's gone up on fumes and on the fact that it might happen, and now I think it's happening, you know, and I think that's the big difference. So yeah, and I think Callum's a very sensible young man, and you know, he's got his head screwed on, and I think he knows what he's doing in terms of trying to make this, you know, happen.
On that note, I think we'll wrap it up and say have a great weekend, or what's left of it, and we'll catch up next week.
Yep. Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net